It happened again. I'm not saying I told you so, but I'm definitely going to say that if you're new to our channel, we teach the financially foolish or fit how to crack the code to cash flow by practicing something called the infinite banking concept. Sometimes folks refer to this concept as privatized banking. It's the ability to get your money and finances out of the third-party commercial banking system where someone else is in control and take back that control for yourself. A few weeks ago, we made a video talking about SVB, that's Silicon Valley Bank, and the collapse of that bank and the bank run that ultimately was its demise. If you missed that video, you should absolutely go back and watch it. In this video, unfortunately, we have more news to report, and that is about First Republic Bank. Let me tell you a little bit about them. First Republic Bank was a commercial bank and provider of wealth management services headquartered in San Francisco, California. It catered to high net worth individuals and operated 93 offices in 11 states, primarily in New York, California, Massachusetts, and Florida. It had over $229 billion in assets. That's billion with a B. On May 1st, 2023, as part of the 2023 banking crisis, the FDIC announced that First Republic Bank had been seized and is closed. To understand what happened, we've got to go back and talk about March of 2023. Over the course of 5 days in March 2023, 3 conventional U.S. banks completely failed. This failure triggered a sharp decline in global bank stock prices, and it triggered a response by regulators to prevent the potential global spread of market value. These banks were Silvergate Bank and Signature Bank. They failed in the midst of what I might call turbulence in the cryptocurrency market. Silicon Valley Bank, SVB, failed when a bank run was triggered after it sold their treasury portfolio, their treasury bond portfolio, at a humongous loss, which caused depositor concerns about the bank's liquidity. The bonds had lost a significant amount of value as market interest rates rose, and the bank shifted its portfolio to longer maturity bonds. And the bank's clientele was primarily technology companies and wealthy individuals holding extremely large deposits. But as you know, or may know, bank balances exceeding $250,000 are not insured by the FDIC. In response to the bank failures, the 3 major U.S. bank regulators announced a joint communication, which you can see here on the screen, that extraordinary measures would be taken to ensure that all deposits at Silicon Valley Bank and Signature Bank would be honored. So, here are the problems. The Federal Reserve established a bank term funding program. It's got acronyms BTFP to offer loans for up to 1 year for eligible depository institutions, pledging qualifying assets as collateral. That's red flag number 1. To prevent the situation from affecting more banks, the Federal Reserve, the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, the Swiss National Bank provided extraordinary amounts of liquidity. That's red flag number 2. By March 16th, there was so much money coming in from these other institutions that some analysts were talking of a possibly broader U.S. banking collapse. The Federal Reserve had experienced approximately $150 billion, that's with a B, in borrowing from other various banks by March 16th. That's red flag number 3. So here's how that affected First Republic Bank almost 2 months later. Soon after the bank run at SVB, depositors quickly began withdrawing cash from a different San Francisco-based bank. That's First Republic Bank. Again, they focused on conventional banking to wealthy clientele, just like SVB. They had a substantial amount of uninsured deposits, that means exceeding $250,000. Such deposits constituted 68% of the bank's total year-end at the end of 2022. And by March of 2023, that 68% had dropped to 27%. There was over $100 billion in deposits that were withdrawn in that time, 3 months. Then in March 2023, they had over $30 billion in a capital infusion from a group of major banks. This sounds exactly like what happened with SVB. So First Republic Bank continued to destabilize, and its stock price plummeted as the FDIC prepared to take in its ownership and its receivership and try to find a buyer for this bank. On May 1st, the FDIC announced that First Republic Bank has been closed. Or let me be more clear, they actually announced that it had been seized by regulators, and then they subsequently sold this bank to JP Morgan Chase. In the midst of that panic, First Republic shares fell 75% and closed at $3.51 the Friday before the seizure. First Republic Bank had over $229 billion in assets, making it the second biggest bank to collapse in the U.S. history after the 2008 failure of Washington Mutual, which at the time had about $307 billion in assets. Both banks were sold to JP Morgan. Now, this is also a problem. The biggest bank in the country just got even bigger. Folks, if you're not understanding that the banking system is not set up for you, it's not set up to benefit you in any way. Banks operate under the fractional reserve banking structure, meaning they have the ability to loan out 10 times the money that they actually have in their vaults or their systems. Anyone else with that same business model would find themselves promptly in federal prison. The infinite banking concept fixes these issues by getting you out of the control of the conventional banks and their system. It puts you in the driver's seat, where you don't have to have your money at risk in these financial institutions and worried about the FDIC, bank seizures, bank closures, stock price falling, and most importantly, the security of your hard-earned dollars. You've got to check out the other videos on our channel to learn more about privatized banking. I'm Joe Nadeau, I'm one of the banking bros, and we'll keep you updated on all things finance.